Well, good afternoon, everyone. My name is David Newman. I'm the Senior Vice President of Market Growth at the National Pork Board. For those of you that are not familiar, the National Pork Board is a producer-led organization that seeks collaboration with industry experts to distribute information to help pig farmers in a wide array of business objectives. Today, we're going to hear from Lee Schulz, economics professor and extension economist at Iowa State University, as he gives his expert opinion on the recently released Hogs and Pigs report. And then we will hear from Stuart, who will give us an update on the global state of the industry. Thank you to everyone for joining us today. Prior to beginning, I want to take just a brief moment to talk about the antitrust statement. At the National Pork Board, the work we do all complies with the Sherman Act. The best rule is if you have a question, whether a certain matter can be discussed, first clear it with an attorney. I'll give you a few seconds to review the statement before we move on. The pork checkoff funds are being used to host this webinar with the purpose of helping pork producers understand publicly available information. This webinar will be recorded for further distribution, and the views expressed by the guest speakers are theirs and not those of the National Pork Board. Now I'm going to hand it over to our first expert, Lee Schulz. You can come back on and we will get things started. Thank you.
Right. Good afternoon, everyone. I see that this didn't paste over very well, the table here, so I'll be kind of reading some numbers that maybe aren't showing up here. But what I thought I would do is first review the latest numbers of the Hog and Pigs report. This will provide year-over-year comparisons and then also provide where those estimates are relative to pre-report expectations. And so we'll just kind of run down these numbers quickly. The all hogs and pigs number was 76.48 million head. That was 0.5% larger than a year ago and really right in line with pre-report expectations. The kept for breeding herd category was 6,044,000, and that was 2.2% below year ago levels. And right in line with pre-report expectations, just 0.2 percentage points higher than what the market analysts expected. Market hog inventories were 70.437 million, which was 7.7% higher than a year ago and just slightly below pre-report expectations. If there was any maybe surprises in this report, that'll be highlighted by the numbers in blue there, which I do that if it's plus or minus 1 percentage point different than pre-report analyst numbers. As we look at the under 50 pounds market hog category, that was 22.194 million head. That was 1.5% below a year ago levels. And that was 1.5% below pre-report expectations. The 50 to 119 pounds was 20.232 million head, and that was down 1.3% from year ago levels, and again below pre-report expectations, almost two percentage points lower. The 120 to 179 pound was up 3.5 percentage points compared to a year ago level at 14.997 million head and larger than pre-report expectations, over 2 percentage points larger. The 180 pounds and over was 13.014 million head, 4.8% higher than a year ago and 3.1% higher than pre-report expectations. You know, I'll also highlight here as we compare to pre-report expectations, we do need to take revisions into consideration, and the analysts would not have had those revisions, that data relative to where they're making those pre-report expectations. So that is why we're seeing some of the difference there. As we get into the sows farrowing, for the June-August, which was the latest data there, we seen 2.989 million sows farrowed. That was down 1.7% compared to year ago levels, but very much in line with pre-report expectations. The sows farrowing intentions for September, November was 2.959 million head, which was just slightly below year ago levels and slightly larger, about 0.5 percentage point larger than pre-report expectations. And then the first farrowing intention estimates for December, February was 2.933 million head, and slightly larger than a year ago levels, and really right in line with pre-report expectations. The pig save per litter was up 0.9% compared to a year ago levels at 11.72 for the June-August quarter. That was slightly lower than pre-report expectations. So if we take sows farrowing and the pig save per litter numbers, that gives us a pig crop of 35,030, and that would be about 0.8% lower than a year ago, but right in line with where pre-report expectations were at. I mentioned that we do need to take revisions into consideration, right? That helps true up the numbers. And again, we're providing year-over-year comparisons that does alter, where kind of our expectations were prior to the report and now the release of the report. The all inventory pig crop estimates for September 2023 through March 2024 were reviewed using final pig crop official slaughter, death loss, and updated import and export data. That should say June 2024 as opposed to March 2024. The changes here were that they look back at the March 2024 all hogs and pigs. That was increased 370,000 head. That was all in the market hog category. And as you'll see, that was in the under 50 pounds where it was increased, and the 50 to 119 pounds was decreased about 250,000 head. The other revision was to the June 2024 all hogs and pigs numbers. So that was an increase of 750,000 head, again, all in the market hog category. And that was across the three largest market hog categories, adjustments made there. As we think about where the adjustments to the pig crop were, we dip back to December, February 2023 into 2024. We did see a 1.8% increase in that pig crop. That was all due to more sows farrowing. As is traditionally the case, USDA does not make a change to the pigs per litter estimates, and so the sows farrowing did increase of 1.8% there, didn't contribute to the larger pig crop. I'll note there that we look at pig crops and 2 quarters later, and that is the impact to the slaughter levels. The March-May 2024 pig crop was increased 0.3%. Again, that was in all the sows farrowing, up 3% compared to a year ago levels. One number I'd like to highlight, this doesn't get a lot of attention, but it's in the narrative of the Hog and Pigs report, and it reports quarterly the percent of total U.S. hog inventory owned by contract operations with over 5,000 head, but raised by contractees. This data goes back to December of 1996, where it was just north of about 20%, and the latest data as of September 1 was 53%. And as you'll note, that is the highest percentage we've seen since this data has been collected back to 1996. So as we look at the implications of the market hog inventories, I did want to review back a little bit as we look back at the last Hog and Pigs report, and what that meant for slaughter compared to what the actual levels were for slaughter reported by USDA. We did show that the last Hog and Pigs report did estimate quite well where those market hog inventories were. Now, there was some differences week to week, but if we look at the data since June 1, the actual slaughter was up 2% compared to a year ago. The Hog and Pigs report had it right at about 2% as well. So only about a 3,000 head difference between the report and where the actual slaughter was. So need to give USDA credit again there estimating those market hog inventories. For the year, hog slaughter is up 1.2%. And just over 1.1 million head compared to year-to-date 2023 levels. Now, as we think about the current market hog inventories, I think it is always important to keep in mind here that we look at hog weights. We'll note here, and it looks like the data got a little messed up for the tables looking at year over year, but hog weights for producer-owned hogs have been higher. Actually, if you look at the last, really since the average of 2015 to 2019, we've continued to see hog weights higher. Producer, packer-owned hogs, we've not seen those weights adjustment as much. But I think it's important to keep in mind as we're seeing cheaper feed costs, that could have implications for continuing in those higher weights. And that may see some adjustments when we think about market timing as we go forward. This is the last slide in the hog and pigs report. It's on page 13, and I like to show this report show this table for a couple reasons. One is, as we look at the pigs per litter, those continue to be record pigs per litter estimates. So as you look at the last 3 quarters reported here, 2024 was the record, and really this is continuation of what we've seen over the last several quarters. Also, I'll highlight there the pig crop. 2019 was the record pig crop for June, August. But realizing that even as we look at the latest pig crop of just over 35 million, it's not all that far off the record, even though we're not seeing close to record levels of the breeding herd. So we'll talk about kind of the implications of productivity and why we're seeing some of those larger pig crops quarter over quarter. So I wanted to highlight as we look at the latest hog and pigs report, there wasn't much changes when you look at the all hogs and pigs inventory, very close to a year ago levels. Market hog inventories were larger than a year ago levels. And I've shown this slide before. When we think about the hog cycle, the hog cycle, we typically see adjustments in those production levels that aligns very much with the economic conditions of producers. When we're seeing losses in the industry, we see contraction, and when we see profits in the industry, we see expansion. Now, as you look at the latest hog cycle graphed here as the year-over-year change in commercial hog slaughter, you've seen there's not been much adjustments in production levels. You'll see many green year-over-year levels increases for the last several quarters. I think there's several things dictating this. I highlight those. There is likely a laundry list, but I think as we think about productivity and efficiency, each breeding animal continues to produce more pork in the form of more pigs saved per litter and higher carcass weights. So we need a smaller herd to even hit a targeted pork production. That goes both ways when we think about expansion as well as contraction in the industry. Certainly biology plays a role, but also I think we need to continue to think about asset fixity and specificity. They certainly play a role in our delayed maybe adjustments to where the economic conditions are relative to where some of the production levels are. I'll highlight here that we've seen the largest efficiency and productivity when you measure this as pork production per breeding animal. So if you look back to December 1, the breeding herd was just under 6 million head. And the current projection for pork production in 2024 is 27.9 billion pounds. This gives us a record pork production per breeding animal. So again, we continue to see some reductions. The latest breeding herd was down 2.2%, but again, we continue to produce more and more pork. Now, as we dig into a little bit of the specificity here, as we think about the hog and pigs report, this is the latest estimates of sows farrowing and farrowing intentions. I'll highlight a couple things here. We continue to see those farrowings and farrowing intentions lower than much of really the last decade, right? I think these are some of the smallest sows farrowing numbers in the last decade. But also noting here over the last couple of quarters, we've seen those farrowing numbers get larger over the couple of reports. So if we think about producers providing the first intention and then the second intention, we continue to see those sow farrowing numbers increase. Now, where that has implications for the latest hog and pigs report, if you look at September, November, that sows farrowing intentions was 2.959 million head, about similar to year ago levels. When you look at the breeding herd utilization, so look at sows farrowing divided by the breeding herd, for that quarter, it would be 48.96 for the September-November quarter. That's very much in line with what we've seen over the last several years. So I think that certainly gives some credence to where those farrowing intention numbers are at. relative to where the breeding herd. If I would see that out of line with historical levels, we could maybe expect to see more adjustments in either the sows farrowing or the breeding herd. But given where that ratio is here, I think it's pretty consistent with where that's been historically. Productivity has been the big factor that's continued to be highlighted over the last several hog and pigs reports. I think first, importantly, it's good to mention that we are at historical productivity levels. So if you look at on the left hand, the pig saved per litter, I would argue we're continuing on this new trajectory where we're seeing relatively large year-over-year increases that we kind of resumed after the 2020 to 2023 period or so. Now that's similar to maybe what we've seen if you dip back to 2006 into 2017 to 2018. Now the slide on the right there shows those quarterly pig save per litter estimates, and I think it really highlights what's going on now. So if you go back to March, May of 2023, that was the first time we've seen a real large year-over-year increase of 3.3%, was followed up by 4.3% the next quarter, and so on and so forth. Well, important to keep in mind now, we're starting to compare to really large numbers a year ago, right? So as you look at March, May of this year was only up 1.8%, but that was still a record pig save per litter. Similarly here in June and August, again, a record pig save per litter at 11.72 for the quarter, but only up 0.9% because we're comparing to that big increase a year ago. And so as you looked at these year-over-year changes, it's not that surprising that we're seeing these start to decline from a year-over-year standpoint, but realizing that, again, these are record pig save per litter, and I would anticipate those to continue going forward if we maintain similar conditions. One of those conditions is as we look at disease incidents. So if you look at the latest data from Dr. Bob Morrison's Swine Health Monitoring Project out of the University of Minnesota, comparing that year over year. Now those aren't perfect comparisons, but I think it gives us a rough barometer to show us that disease incidents, both in PRRS and PDV, have been lower than some historical levels measured here. And so I think that's certainly contributing to the higher productivity levels we continue to see. Next couple of slides before I pass the baton on here, I'd just like to kind of highlight some of the economic conditions that are persisting in the industry. So first, showing you here USDA's latest estimates of U.S. hog cash receipts. I'll remind us that cash receipts are both the quantity as well as the price. And so when we look at the blue line here, these are some of the highest cash receipts that we're seeing. Now, when you adjust for inflation, so given in real dollars, those dollars don't go as far. And so we've seen periods where there's been higher cash receipts on that adjusted standpoint. But for 2024, the current forecast is $27.9 billion cash receipts for the U.S. hog industry. This would be the price component of that, and I'm going to show you here price forecasts to 2026. We'll credit the Livestock Market Information Center. They're the ones willing right now to go out to 2026 and provide some of those forecasts. And I'd also like to show you across three forecasts. So it'll be the Livestock Market Information Center, USDA's Economic Research Service, and then taking futures prices and adjusted for an Iowa, Minnesota basis to give us a futures forecast using that market. To look back a little bit, 2022 was the second highest prices we've ever seen. They rivaled 2014. 2023, on average for the year, was the seventh highest nominal prices ever. As we've gotten into 2024, we did see much higher second quarter prices. Third quarter prices right now are forecasted about 7% lower than year-ago levels. And then into the fourth quarter, we're maybe expecting a little bit stronger prices. And if you look at the composite forecast there, would provide about a 1% increase in hog prices in 2024 compared to 2023. Similarly, 2025 forecasts are maybe for slightly lower prices, about 2% lower with those coming in, especially the second quarter of 2025, and then potentially again a replay into 2026 as the Livestock Market Information Center has an annual price of 81, which would be about 1% higher than what would be forecasted in 2025. So as we think about that prices and what that equates to profitability, this is the Iowa State model for estimated livestock returns here for fair to finish production, just updated based on futures prices yesterday, would provide a 2024 profitability forecast of just under a $4 loss at 386. And then 2025 would be on average possibly profitable at about $1.62. Realizing there's a lot of variability across producers, this just provides a general barometer of that profitability over time. We've seen prices notably increase if we compare to earlier this summer. So this is the December lean hog futures contract, which really hit a low in early to mid-July at around that 62 to 63 range, currently trading in that 73 range or so. And if you go further back, we've seen highs in this contract really in about April time period of this last year, and still below where those futures prices were at. Now, if it's not necessarily prices, as I noted, 2023 was the 7th highest nominal price. We're seeing potentially a bit stronger prices here in 2024. We have to really point to the cost situation. So as you think about costs from 2020 to 2023, increased roughly 50%. Our forecast for 2024 are possibly a 12% decline in those total costs for fair to finish production. And then 2025, maybe another 4% decrease. But I'll highlight here, even at an 82 average for 2025, that still rivals some of the higher prices we've seen, higher costs we've seen historically. For example, you look back to 2011 when we had an average of 83. Now, as we think about feed ingredient prices, predominantly corn, soybean meal, distillers grains, they're down more than 12% here in 2024, and an even further reduction potentially expected in 2025 when you compare it from a year-over-year standpoint. So what is really providing the stickiness when you think about cost levels and where they're currently at are a lot of the other non-feed variable and fixed cost components that pork producers incur. And so highlighting here USDA's indices for prices paid by farmers. I'll note if you compare to that 2015 to 2019, really everything's higher across the board. And even compared to a year ago levels, many costs are higher than those year ago levels. And so that's really providing a lot of staying power when you think about cost of production for producers. Another factor is we see interest rates at really about 20-year highs. The latest data showing interest rates for both operating loans and at that 8.47%. So again, even providing a much higher cost for pork producers. And I'll end with this. You've seen the data a little bit already. This is a bit different form here as we look at 2024. Again, losses potentially about $4 per head on average. Currently, we are seeing some profitability in the industry. We're coming off of several months of modest profits. As you look at some of the seasonally higher prices, our model shows the next couple of months could continue some of those modest profits to break even levels, but getting into some red ink as we get into the fourth quarter into winter, and then possibly a resumption of profitability as we get back next into spring and summer. And on average for 2025, some modest profits again at about $1.62. But I'll note here, if you look in those brackets, still significant variability across those profit levels, even from a within year standpoint. So I think that provides a lot of risk for producers, but I'll also highlight the market currently is offering some opportunity with some profitable prices at times remaining this year as well as we think about getting into next year. So before I pass the baton here, I'll highlight several resources that I've covered in this slide. We provide regular updates to that information available here at several Iowa State University websites. Thank you.
Appreciate that, Lee. Great update. I was just thinking through that report as you walk through it. You know, there's some reports are a little more exciting than others. This one wasn't too exciting. Farrowing intentions, whether or not they actually come to pass, suggest no real further liquidation as we look out through winter. And I guess the other things were fewer of those small pigs and 3.5 to 4% more of the big pigs. So let me just talk through some perspective from my angle here. I want to talk a little bit about U.S. hogs and pork, and then we'll shift over and talk about exports in the global market. If you look at our weekly pork production here, January through May, production was up 0.6%. So pretty much stable through May. Then once we hit June and August, and you all know what happened, weights went up. This was a weights situation that took those June to August production numbers up 4%, 3.8%. And the question is, what's going to happen going forward? Now, if you look at the WASDE report, the WASDE shows 2024 pork production up 2.7%. If we were up 1.1% in the first half, that says to get to that WASDE number, we're going to be up 4.3% in the second half of the year, July through December. And when I built this chart, I thought that seems a little ambitious. But looking at the report there and listening to Lee's numbers, we may be looking at some big production here as we come into Q3, Q4. And so we'll talk a little bit more once we get to exports about what's going to happen with that bigger production. Let's look over here next at the WASDE. This is the 2024 numbers for beef, pork, and poultry. It's actually broilers in the WASDE report, but you can see here, those are the shifts, year over year change. And for pork, you can see that big blue area, that was an increase in production. The green area that actually takes negative supplies away, that's an increase in export. So our export increase reduces that net, the 389. And that's 389 million pounds. So on a retail weight basis, what this tells us is 2024, we're looking at 0.9 pounds per capita more pork for every man, woman, and child in America. 0.8 of a pound of beef and 3 pounds of broiler. So you can see that broiler production number. You can also see the decline in exports. And that's really what pushed that broiler number up, was reduced exports this year. For beef, you can see it was increased imports is really what made the difference on beef, with production mostly stable. Now that's 2024. If we look at 2025 next here, you can see the difference. And pork, it doesn't show much difference. A little more production, a little bit of an export increase, and about 0.7 pounds per capita more pork on our market. Broilers are going to be up 1.1. The shocker on this chart is beef. USDA's calling beef supplies, per cap beef supplies, down 1.8 pounds next year. Now, I would tell you 1 year ago, this chart looked the same for 2024. And the year before that, it kind of looked similar for 2023. But we've just had this drought push and push right on into early 2024 that's kept moving that beef shortage a year out. And so the real question becomes, will 2025 be the year of that big beef shortage? And it sure looks like it's shaping up to be. The beef herd's now down 10%. Calf prices have been great. Up until the last couple weeks, pasture conditions have been really good. We fully expect that we'll see some restocking of the cow herd in 2025, which pulls heifers out of the mix. It reduces the cow slaughter, and we expect to see a pretty good drop in beef production in 2025 that'll carry right through 2026. Now, the question for pork, does that matter, right? Do high beef prices matter? Well, if you go to the next slide, we can look at the retail prices, and beef and pork aren't substitutes, or they're statistically not very good substitutes. But I would suggest high beef prices don't hurt pork, right? And you can see those retail prices. What that chart's showing on the left, that's the percent change in the retail price compared to the 2016-2019 average. So the 4 years before COVID, if we look at that average and you can see that flat line, that's where retail prices moved up and down for 4 years. a very tight range. Post-COVID, this is the new inflation, right? That new inflation jumped these retail prices 30% now for chicken and pork, 42% for beef. And again, this is before the beef supplies get tight. We have positive change in beef supplies this year. Next year, we'll have a big negative drop, pushing those beef prices even potentially higher. But pork and chicken right there, 30%. So you can see consumers do love meat. They are paying up significantly from what they paid in the past. And we all know how the meat business works. None of this meat's getting thrown away, right? That's the clearing price every week to move all of it. It's a sell it or smell it business, and it all gets sold at these prices. Now, the question comes, what about recession and what about an economic correction? We're due for one, and potentially we could see a correction in 2025. So the chart on the right shows retail pork prices through the last 8 recessions. And what that is, that's the retail pork price on month 1 of the recession, how that price changed throughout the recession. And if you go clear back to 1973, you can see those retail pork prices dropped almost 20% by month 7. And also back in 1970. Now, I don't have experiential knowledge of those 2 recessions, but I think the one that we all know very well was 2008, the longest recession we've had. It was prolonged. It was on top of the housing crisis. It was a pretty deep and severe recession. And if you look at this chart, those retail pork prices stayed higher pretty much the entire length of that recession. Now, the one reason I bring this up is if we think about it, a recession, what it does, it slows down the food service business. People are eating out less, and they're in the grocery store buying meat. That's not a bad thing for pork. And we saw that during COVID. When consumers are at the restaurant buying a beef taco or a pork taco, the price is pretty similar. When they're at the retail case looking at beef ribeyes at $16 or $18 a pound, those $3 pork loins look really attractive. And so the point being, a recession isn't necessarily a bad thing for pork. And I'm not saying we're headed for a recession. I think there's one somewhere out there. Honestly, I think if we have one, it'll probably be short-lived and probably be more of a soft landing. And we'll just have to watch and see what the Fed does with interest rates and watch consumer spending and debt. So over to the next slide. The big question, that big supply I showed you, that 4% increase in the back half of the year, can exports save us? Can we stuff enough in containers and send it somewhere else? Send these pork loins to Japan. If you've been to Japan, you've probably had tonkatsu, which is that picture on the right, or you maybe had at a Japanese restaurant in the US, those breaded deep fried pork loins. Can we export ourselves into a better spot? Now, the next slide shows my forecast here against historical pork exports from the US. And so I've got 2024 now up. It's about 5.5%, rounds up to 6. 6% export growth, if you're exporting about 25, 26% of production, that absorbs a 1.5% production growth. Now, I showed you the WASDE was suggesting we're going to have 2.7% production growth this year. So about half of that will be absorbed through bigger exports. The other half is simply going to have to be eaten. And so exports are good this year. They're not lights out fantastic. They're good. And next year, I've got them up 5% right now, the preliminary number, looking at another good year. But the point here being, exports will not save us from a 2.5%, 3% production year. Next slide, you can see here my monthly forecasts, and the dark blue line is the actual, the dotted blue line is my forecast. And I was kind of losing some confidence there in May and June because those export numbers came in so weak, a little weaker than expected. And part of that was due to the number of days in a month. But even still, it was just a little bit underwhelming. July came in good, had a big gain in June, up 12%. You can see what I'm looking at for the rest of the year. Now, based on those bigger production numbers, I might be bumping that Q3, Q4 a little bit just because we are going to have more pork, and that's probably going to press on the market a little and keep us competitive in the export markets. The next slide here, you can see my export forecast by country. And it's a wild story, right? I remember living through all of that. as an analyst doing this. And the China ASF situation, very obvious there. But you look and if you really step back and look, we have one market that is very, very important, and that's Mexico. The growth in Mexico has been shocking, especially the last 4 years. We're now approaching 2.7 billion pounds a year of pork going to Mexico. So I feel like we need to talk a little bit about Mexico. If we look at exports and export risk, where's our risk here? We need exports to Mexico to work. We need this to continue. And so the next slide here, you can see how important those hams are. And the vast majority of what we send to Mexico are bone-in fresh hams. These are hams that we don't have a freezing cost. We don't have a boning cost. They're in a truck crossing the border every day. And it makes us incredibly competitive. Now that chart on the left, that shows the ham cutout versus hog prices. And you can see there, hams have a major impact on the cutout. If I ran that with bellies, it's kind of all over the board, but hams are a key driver of that cutout. And so this ham business to Mexico, you can see on the right, it is now 10% of our entire production. 10%, not 10% of our ham production, 10% of our pork production. So it would be even a greater percent of our hams crossing that border every day into Mexico. And this makes some people nervous. I often hear, hey, we are way too dependent on that foreign market. And you can make that debate either way, but I want to show you a couple numbers here to maybe calm some nerves. If you look at the next slide here, the amount of pork that Mexico eats now is 51% imported. Imports comprise 51% of all pork consumption in Mexico. Now, that's an important number because what that shows us here, we can sit and say, wow, we are really dependent on Mexico. We got to play nice. But Mexico can look across the board to the north and go, hey, we're pretty dependent on the US. We need that pork. That's half of our consumption now. What I'm saying, we have a pretty comfortable codependence. And a codependence is a good thing. If a country's importing 10% of their consumption, if you have political issues or pushback, then the problem's on us. But if it's 50% of consumption, they have a problem as well. And so I bring that up just to kind of help explain, we're going into an election here that's too close to call right now. And if you remember, in 2018, President Trump put steel tariffs on Mexico, which led to a retaliation on pork. And I'm going to be going on a deep dive in that for our subscription group next week. But the bottom line is we're pretty good at resolving issues with Mexico. And the reason is we have this, what I think is a healthy codependence. If you look at that pork going into Mexico, if Mexico were to try to stall US pork, where can they go? 86% of their pork comes from the US. 12% comes from Canada. A little teeny tiny bit comes from Spain and Brazil. And so my point here being, this is a good market. I think it's a stable market. I don't think we need to be too concerned going forward. Another factor in the next slide, you'll see Mexico has had some major drought issues. And go ahead and click us to the next one. So last year, 2023 was probably the worst drought in Mexican history. This is where we are in August 2024. This drought is still pretty tough, right? So the Mexican drought is severe. They have had to live pretty much entirely on imported corn. And I can tell you, feeding pigs corn in the US Midwest and producing those bone-in fresh hams to cross the border is more competitive than shipping the corn south and then producing the hogs. And the Mexican hog prices have been high. They've come down a little bit the last month or so, but they're still at a very big price premium to US hogs right now and to US pork. And so the point being, Mexico looks good. I think we're in a good spot, and I think we can continue to depend on big volumes into Mexico. Let's shift over now, just talk a little bit about global hogs and pork, some of our competitors and some of the things happening around the world. The next chart here, you can see the sow herd changes. And this is the change in relative sow herd. Oh, we got that. Next slide. Yeah, here we go. The change from 2018. So you can see there those herds, and this is on a percentage basis. So you got to remember, half of the pigs in the world still live in China. So on relative numbers, the chart on the right shows those relative numbers. The chart on the left shows percentages. But you can see here a story, right? Outside of Brazil, every major swine herd has been in liquidation the last 2 years. And for Europe, it's been over the last 6 years. 10% of that EU sow herd is gone from 2018. China, 5%. I think it was probably a little more than that in China. My estimates are probably 3 to 4 million sows, which would be closer to 7 to 9% of their herd. Canada down, US down. But look at Brazil. Brazil's the one herd that's increasing. Now on the right, you can look at that number of sows and what that means. If you look there at Brazil, that's 230,000 sows. It's a pretty small bump, but Brazil is increasing their herd and they're increasing their exports. So let's go to the next slide here and start off talking about just that price spread. Chinese prices have risen significantly the last year. They've actually got profitable after 2 years, most of 2 years of not being profitable. But that China industry is not showing any real signs of excitement. There's no optimism. Piglet prices remain low, even though profits are last week probably around $40, $50 a head in China. Piglet prices remain very low. They're not chasing piglets. They're not chasing sows. A lot of those farmers are just trying to heal up. And so you can see Mexico, EU, Brazil, and just recently, Brazil surpassed US hogs. So the question is it good to be on the bottom of this chart? Is that good or bad? Well, it's good and bad. What it means is we are incredibly competitive, right? We're the cheapest hogs in the world. That's a great spot to be, except for profitability. It's not fun to be the cheapest hogs in the world. So from an export standpoint, we're very competitive. If we go to the next slide, you can see those Chinese prices. And here's what I'm talking about. On the left, you can see the China live hog price, and that's in RMB per kilo. You can see the ASF surge when they made all that money, huge profits, $300, $400 a head in China. And then you can see most of the last 2 years were spent underwater. So right now the profits are up, they're making money, but that chart on the right tells us it indicates enthusiasm. And you can see those piglet prices remain very subdued in China. And so even though they're making money, it tells me nobody's expanding. I think there's some real concerns about the Chinese economy, and I think their future is going to be a little different. This next slide, let me just talk through some thoughts here on China. I think overall pork demand, and what I mean by total tonnage consumed in China, may be smaller. I think it's a generational change. Chinese have been some of the biggest pork consumers in the world. But new generations are shifting diets, and they're actually have become very quickly the biggest beef importer in the world. They're importing poultry, they're importing seafood. Now, for the US, those key items, ears, feet, neck bones, tails, those kind of things, will always have a home in China because that's unique demand. But the import demand for whole muscle cuts, that demand's mostly on hold for now, and that may not return to those historical levels. I mentioned the beef prices. You can see there, US beef prices going into China are now at new highs. They're buying a lot of US beef and they're paying a lot for it. But if you go through those restaurants and through the malls in Beijing and Shanghai, they're different than they were 5 years ago. There's so many new offerings. There's so many new restaurants. And I think it's just a new change in their diet and in their culture. And so their meat and poultry imports as a country, they have declined from those big peaks in 2020. But China's still importing $1.7 billion a month. Now, this is from all sources worldwide. $1.7 billion a month. That is almost double what Japan imports. Number three is the US, about $1 billion a month in meat imports. China will remain the largest meat and poultry market on earth, but I would say temper any enthusiasm here looking forward into 24 and 25. I think the weak economy is going to keep a lid on any real demand growth for imported pork. Our US shipments to China, Hong Kong are down 35, 40% year to date. And so it is just a weaker market. Now, I mentioned Brazil. Let's talk about Brazil. This is Japan's pork imports from Brazil. Now, Brazil has a couple of states that were declared free of foot and mouth disease without vaccination, which is the threshold to export to Japan and other countries. They've started tiptoeing into that market, and you can see the tonnage now is 6,000 tons a month of Brazilian pork going into Japan. And you can see the price there is very cheap. Now, Brazil's share of that Japanese market, 2022, they were 1%. Today, they're now 5%. Brazil is finding a home, and this isn't competing with our chilled loin market. This is meat that's going into pre-cooked dumplings and kind of the lower value end of the market, but it really does have a home in Brazil, and I expect to see Brazil ship more and more pork into Japan. Again, I think they're a long ways from competing. Anyone that sold pork to Japan knows how tough those specifications are at the high end of the market. They are very tough to reach. I think it's a big, diverse market. There's a place for Brazil, US, Canada, and everyone else. But it's kind of interesting to see Brazil starting to push into that market. All right, over to Europe. Just a quick scan here. The EU hog prices you can see on the left, those 2024 prices far below 2023, cheaper feed costs. Some producers have made a little bit of money over there. In Spain's been profitable, not greatly profitable, but a little bit profitable. But I showed you that market is somewhat in decline as they continue to reduce their herd. Now, if we look at just a price to price comparison, this is about as apples to apples as I can get. EU hogs minus US hog price is about $16, $18 a hundredweight right now. And if you look at that chart, the last 2 years, the US has had a fantastic advantage over EU pork. Now, I fully expected a year ago to see a lot more market share shift in Japan because of this. We haven't seen that. And one reason is that weak yen that just plummeted here in 2024 has made imported meat expensive from the US, from Europe, from everyone. And it's really kind of hung an anchor around the neck of the imported pork market in Japan. But if you look in the last 6 weeks, that yen has corrected back really to where it was in January. And I think over time here, the next 6 months, the next year, I think we're going to see more frozen business from the US going to Japan. I think we're going to start to displace a little more of that EU pork into Japan. This next slide, you can see those EU pork exports. This is a pretty significant drop, right? This is the biggest exporter in the world. And here they dropped in 2022, 20%, 32%. Year to date, those exports are down 9% out of Europe. And you can see there the bulk of those go to Asia. This is a herd that is in decline. The EU Commission forecasts that the EU swine herd will continue to decline over the next decade. And it's climate policy, it's animal welfare issues, it is high energy costs due to the Russian conflict. It's a little bit of everything, but they are making some fundamental shifts lower in pork production. Europe historically exported about 10% of production, so they can cut about 10% of production and still have the same domestic supplies. But the reality is they're pulling away from some of these key export markets. So I guess to wrap it up here, just some key thoughts. The normal risks to global pork trade and U.S. exports include disease, politics, interest groups, potential export restrictions. Those are just the normal risks, and they're always out there. But I think there's some real opportunities. U.S. pork remains very competitive. We've seen some big market share growth in Korea, in Australia. We've seen some good growth into the CAFTA countries, some of those Latin American countries. We know that European pork faces some serious threats and will likely see production declines for the next decade. Mexico now buying 10% of production. How resilient is that? I think we're in a good spot. I think Mexico is going to keep buying. I think, like I said, we're in a pretty good codependent relationship there. Current projections show hog farming losses beginning again this fall, probably within the next 30 days, meaning farmers are going to have reduced equity. And really, those margins going out through next April look negative. So here's the question: will liquidation actually outpace productivity? Based on today's Hogs and Pigs report, no, it won't. Productivity is likely going to outgrow any liquidation. And then over to China, that hog cycle has likely turned, but there's no real reason for optimism yet. So with that, I'll go ahead and wrap it up, and we can go ahead and open up the chat for any questions. I think, David, are you taking us away on that?
Yes, sir. That is correct. I'll be taking the questions as we move forward here. So first off, I'd just like to say thank you both to Lee and Brett. So we're gratefully appreciative of your time and your expertise in helping big farmers better leverage the USDA data in their everyday business. For those of you that are online, if you want to receive the weekly newsletter that we put out at the National Pork Board, you can do that just by going to porkcheckoff.org, and you can get signed up. And that will include some of this economic information that we outlined today. So we do have time for some questions, and some questions have come in online here, and I'm just going to get started with those. And Lee, I'm going to put the first question out there for you. And the question was, what do you make of the estimates for the 180 and over category, and also the 120 to the 180 category? And this particular question says it doesn't seem to make sense given the September slaughter.
And I would suggest that that's what the analysts would say as well. If you look at pre-report expectations, I mean, they had the 180 pounds and over up 1.7%, the 120 to 179 up 1.4%. And if you look at the current slaughter data that we have, so we have one official week in September and then 2 of the estimated weeks in September. Hog slaughter's been up on average 1.1%. So we would have to see some very large hog slaughter levels for the next roughly, call it 6 weeks here, to realize what that 180 pound and over category is for USDA. So for me, that is a surprise, that 180 pounds and over, given where current slaughter levels are at. And so that's certainly something to monitor. The early data suggests that may be a little bit large. Also realizing, I think there was some revisions to the data, and so sometimes that can change some of those year over year numbers. But where we're currently at for slaughter, that would suggest those are rather large.
Okay, thank you. And then Brett, we've had several questions come in, and I'm going to turn this one over to you and your expertise, because that's outside of the parameters of what we do at the National Pork Board. But several questions have come in talking about this potential issue with the ports and what that could mean on the global marketplace. So I'll let you expand on that one on your own.
Yeah, you bet. Very big concern, right? The potential strike on the East Coast and Gulf ports is a big deal. And it's a big deal for pork. It's a big deal for agriculture. It's honestly a big deal for the U.S. economy. And the strike is set to take effect Tuesday at 12:01 a.m. If that happens, if they actually let this thing go through, we're going to have problems. We ship a lot of pork out of the Gulf, out of the East Coast. What that means, a lot of that pork, and not just pork, a lot of traffic heads west across the U.S. It's already starting. Some of these West Coast ports are starting to run some extra hours. We know that we could clobber the West Coast ports as well. And so it isn't just an issue for the pork out of the East. It's an issue for all of our ports. Has a major impact, an impact on not just, as I say, the pork market, but on the economy. If it does go through, you bet it's going to have an impact on our pork. It's going to slow down the flow out of the U.S. and potentially back up pork, not just the East Coast, but also potentially on the West Coast.
Okay, yeah, thank you. Several questions came in on that. Lee, I'm going to bounce this back to you, and it was a clarification question from one of the participants, and says, do I understand correctly that 53% of the hogs marketed are farmer owned? So do you just want to expand on that chart that you showed there to give some further definition?
Yeah, I think that's important to give a little bit of detail there. So that's exactly how USDA reports it in this hog and pigs report. They don't say who the ownership, or they don't say who the contractor or contractee is on that. I think when you look at the livestock mandatory reporting data, and so think about that as very comprehensive data, we can back out estimates there, and roughly about 60% of the hogs marketed are producer-owned hogs. Now, 40% are packer-owned, but we also need to remember that many packers also our hog producers, as you think about an integrated model as well. And so, I think the census data is another source of data that provides, estimates of contract production, independent producers. But that data, we only get that every 5 years, and the most recent data was 2022. My reason for including that is, I think one is, it's important to show that data because it's the most up to date. But also, as we think about the economic conditions of producers, this is one metric to measure some possible structural changes as we think about producers making some adjustments over time and what those implications are for the total hog market.
Okay, excellent. Well, in the sake of time, I'm going to start winding things down here, everyone. And I'd just like to start by saying, again, thank you to our experts for taking time to be here today with us. And most importantly, thanks to our producers for what all of you do. And on behalf of the National Pork Board, we are proud to work with you. We know how hard you're working, and we also know, based on where we're at and where we're going here, that there's been some challenges in the business. But along with you and the rest of our peers and our board of directors, I want you to know that we are working tirelessly to continue to build trust and add value to the products that we produce. And this quarterly report and the commentary are just a snapshot of the industry as it is today, and it's a benchmark for the quarters to come. And one of the things that we quite often say is that the National Pork Board is here to serve in this capacity as a convener of experts and a catalyst of information, whether that's our board members building out a strategy to spend checkoff funds, or our staff and our industry partners aligning on producer priorities, just like we did with our panel today. And from my perspective in leading the market growth team at National Pork Board, I would say that we recognize that our producers have also prioritize domestic pork demand as being very important to them. And we recognize that both international and domestic demand are critical to the success of our future. And speaking on the domestic side, as a result, the board of directors has approved a forthcoming consumer marketing campaign for the domestic market. And you'll be learning a lot more about that moving into the last quarters of this year and into a launch in 2025. So we're excited to bring that for you, and we're excited to work on your behalf. So again, thank you everyone for joining today. Hope everyone has a great rest of the week. Thank you.